I want to give a shout out to everybody who showed up to the live stream today. Man, we had a lot of good questions. And one of the ones that I want to expand upon a little bit is what happens if AMC drives hedge funds into bankruptcy? If a hedge fund loses so much money holding short positions on AMC that they can't cover them and they file bankruptcy, do we lose our money? What happens here? And this seems to be a concern for a lot of people, so we're going to clear this up right now, and that's exactly what we're going to be talking about in this video. So of course, if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us. Become a bro. We are here every single day, and we are growing our portfolios together. All right, look, AMC stock is definitely producing some amazing gains, and I believe that we are just getting started. Now, I know you're going to see a lot of people out there promoting prices like $100,000 per share or $500,000 per share. These prices are going to be difficult to reach, right? Not impossible, but difficult. And a lot of people do the math. If they reach these prices, hedge funds are very likely to go bankrupt. If they don't cover their short positions, or if nobody sells them the shares back and they're unable to cover their short positions, there's the likelihood that the hedge fund goes bankrupt. So what happens in that scenario? Will the shares be just left floating out there? Will we hold these shares and nobody covers them? Or how does it work? And that is exactly where margin calls come into place. So we need to know that when you short a position, when you short a stock, you are borrowing that stock from another person, or in most cases, another broker, and then you go ahead and sell that share on the open market and immediately collect a profit. And then at the end, not a profit, you immediately collect the money, and then later you buy it back, hopefully at a lower price. And that price difference is either the profit or the loss on that position. So what happens? These hedge funds, they've gone out there and they've borrowed 100 million shares of AMC, sold them short, and now they are obligated to buy them back. Well, if they don't have any money left, how will they buy them back? And that's where margin calls come into place, like I just said. So margin calls exist for that reason and that reason only. Once the risk becomes too large and the lender says, no, we can't stomach this risk anymore, we are not going to get caught holding your losses. And depending on where they bring these in from, depending on who the lender is, the specific lender might have different risk management requirements. The government might have different risk management requirements. There's a ton of stuff that goes into determining when the hedge fund will be margin called and when these positions will have to be covered. Yes, a high price can trigger a margin call. Yes, low volume can trigger a margin call. New regulations can trigger a margin call. And the margin calls are in place specifically so the lender does not get caught holding the bag of the investor. Now, we know that in this case, the hedge fund would be the investor, right? The hedge funds are shorting AMC like it's going out of business. Well, that's exactly why they're shorting AMC, right? But they're shorting AMC like it's going out of business, and AMC is proving to rebound. So the stock price is going up, and it seems like there's no headwinds available for us right now, and that it's going to continue even higher. So knowing that, this may sound good, it might sound bad, but at least it alleviates the risk of default by the hedge funds. Because yes, when the margin call takes place, they will be required to cover those short positions, and the stock price is going to surge even more. But it doesn't lead to an unlimited price like a lot of people might expect if the hedge funds were just to hold out forever and then go bankrupt. But it's necessary, because if the hedge funds went bankrupt and there were no margin calls in place, then yeah, we would be looking at a worst case scenario of nobody paying us because they don't have the capital. But the fact that the lenders out there can call those shares back and cover them is what's going to cause the stock price to drastically increase, and it alleviates the risk of the hedge funds, of the short sellers going bankrupt. Now, guys, with that being known, I hope that everybody is prepared for a volatile week. If you thought that 2 weeks ago going from $12 to $36 and back to $26 was volatile, you met last week. Last week, we went from 26 to 76 all the way back down to 46, right? The volatility is picking up. It's evident in the options market. It's evident in the week-to-week direction of the price of AMC stock. And it's really, guys, the volatility is there. If you're a conservative investor, if you can't stomach the volatility, I don't know what to tell you. You've used the last 2 weeks as practice. You've got this week to continue to practice. But please do not be scared if we see a drop in price. If the price falls, it's natural. We need to find these places and we need to find these floors where there is support in the market. When the market says, okay, we can sustain AMC at $30 a share. We can sustain AMC at $20 a share. Whatever that floor consolidates at, that is a good thing. It doesn't mean go out and sell your stock. It doesn't mean that it's going to continue lower. It simply means that the market is okay with that price. And it's natural. We need it before we can see the stock price bounce even higher. And when you hit new highs almost on a daily basis, like we've been seeing, that is in essence more dangerous than finding levels of consolidation and slowly stair-stepping your way up. And I hope that everybody is prepared for the volatility ahead, because 12 to 36, 36 to 76, 76 to 106, 106 to 406, like we're going to see some wild swings. And it's okay to watch the pullbacks. So hopefully this sheds a little light and clarifies the whole bankruptcy situation with the hedge funds, prepares you for the volatility in the weeks ahead, because trust me, guys, volatility is coming and I do not want anybody panic selling. Now, guys, if the subscribe button is still red, make sure to subscribe to the channel, join us, become a bro. We are here every single day, and we are growing our portfolios together. Look, there's a link in the description below for Webull as well. Make sure to sign up, use the link down there, deposit $100, get a couple free stocks, sell those free stocks if you want, and then buy AMC, and it's like you've got AMC in your portfolio with absolutely nothing out of pocket. And look, we've got a lot of good stuff coming. If you haven't seen the, I don't want to call it a logo, but if you haven't seen the new merchandise available, it will be coming to ClayBro.com very soon. I'm excited about it. There's a link for that in the description below as well. And then I think Twitter. I think Twitter's the last thing. If you don't follow me on Twitter yet, ClayBro883. You can also use the link down there if you would like. And yeah, guys, I think this is going to be an amazing week for AMC. Volatile, yes, but I believe that we got nothing but good things ahead of us, and I'm very, very excited about it. So, of course, guys, until the next time, I hope that each and every one of you have an awesome day.